This meeting is being recorded.
Good morning, good afternoon, good evening, whenever you are. This is another part of Become cTrader Master webinar series. And today we are going to talk about the Equidistant channel as another important tool for the analysis that every trader should know. Let's just right now focus on where to find this equidistant channel symbol that you want to add to your chart. So for example, if we have any chart, in my situation for the educational purposes only, I am using daily time frame chart of Bitcoin. It's CFD. There is, of course, an icon telling you that the equidistant channel is here. So this is the third after the lines. So you click on the equidistant channel and you can draw this very nice channel on your chart. So what actually it means, equidistant channel. The equidistant price channel is formed when price movement finds support and resistance between two parallel trend lines. The term equidistant means of equal distance, and this refers to the parallel trend lines that are an equal distance apart from each other. And you can see it here on this tool, that when I move it, it moves exactly the same way all the time. If I want to tighten the gap, all I do is to click on the bottom of the channel, and then I can tighten the gap. If I want to change the angle, I need to move one of the ends, right? For example, I can do this, or I can do this with a grab of one of the ends. This is very important for understand the equidistant channel, because it can be both ascending, like I have it right now on the screen. So we call it bullish, with the higher highs and the higher lows, or descending, bearish, with lower highs and lower lows. Let me just give you guys example. What do I mean? So ascending channel, okay, looks something like this. Okay, for the educational purposes only, you can put your channel in this kind of a, let's say, setting. Okay, so that's the channel, and you can move it somewhere, let's say somewhere around here, and now you have the equidistant channel, and this channel is ascending. Okay, but if you need descending channel, which will be in return kind of a bearish channel, of course, so this is how the traders call it. What you do is, for example, something like this. You move the channel here, you move one of the end, and now you change the slope. For example, it might look something like this. So in our situation, of course, we would have to move this slope here, and to make it more right, there you go. That would be our channel. Let me just move only the lower line. Yes, I got the dot here, and I'm moving this for example, this lower line here. Right now, it looks almost perfect. I just want to make it a little bit thicker because it's not maybe something like this. I think it's supposed to be okay for my likeness. Okay, so let's leave it like that. Maybe it might be even better, and I make it yellow. There you go. Everyone can see. Oh, sorry. Everyone can see this channel here. I think there is no doubt we have the yellow channel on the Bitcoin daily time frame chart, and this is a bearish channel. Why? Equidistant channel. This is the high, of course. This is the low, lower high, lower low, lower high. And now it's time for the lower low. Maybe, just maybe, if the history repeats itself, now it's the time for the lower low. So we know that the channel is of equal distance between the upper and lower line, and this channel can be ascending, bullish, or descending, bearish, right? So the main idea of the equidistant channel is to display the increasing or decreasing deviation of the, let's say, of the trend line. All right. So traders use it to identify both short and long-term trends, which can give some valuable clues to to those who use the trend following strategies. However, the use of this tool is not limited to those methods. So the price breaking out of the equidistant channel can be an important sign of the trend reversal. And this is one of the many reasons why traders and analysts use the equidistant channel. So let's leave this channel right now and let's add another one. Okay, can we do it? Of course we can. So let's add the one we got at the very beginning of our let's say webinar. So I want to move this one a little bit like a higher kind of a. There you go. So you see how I'm applying it on the chart is I'm going from the lows to the bottom. Okay, so this is one of the important lows, and this one, then we have one of the important highs here. Then there is a bottom here as well. So I want to make sure that my lower channel line will hit this bottom somehow, and then I will want to move this one somewhere here. So I will leave it, let's leave it white, for example. Okay, let's leave it white. There you go, and everyone can see this channel. Now let me just move this line a little bit lower, maybe something like this should be equal. So what do you see here? Apparently right now are the channels, equidistant channels, that are on a, let's say, on a different time span. So this one is the longer one, the white one, the big one, the main channel, as they call it. And this small one, right, this yellow one, is a kind of a, smaller channel. That's obvious. And in the form of the degree is maybe 1 or 2 degrees smaller than the main channel. Of course, if we zoom out, right, we can see, let's zoom out even more, we can see that there can be even a bigger channel here. All right, so what I mean is that you can have the same time frame, for example, but different channels. And if you want to have more information on your screen related to the channels, if you are trading according to the trend following strategies, this kind of a channels might provide additional information for your analysis by creating the lines of the support and resistance in forms of the upper and lower channel line. So let's stick to the one we got on the chart. Okay, right now let's stick to this two basically equidistant channels. let's say that we are trying to apply this channels correctly on the screen, so it's more or less all right. So what we should expect is that the main channel is to the upside. We have some sort of the breakout right to the upside with the highs around 30,000, let's say, dollars. Then the market goes back into the channel, then it tries to break, then again gets back to the channel, then it tries to break to the upside, then again goes lower and lower. So that red line is of course the current price of a Bitcoin. So what do we want to notice, and what is special about this kind of analysis is the situation. Let me just grab the arrow. So I will show you what I mean exactly. Let's say I want to show you guys this. I want to show you this moment on the graph, this one where the arrow points, right? So if the market goes lower and then goes up and then goes lower, then the larger, bigger channel lower line and smaller channel lower line will provide the support, additional support. So the chances that the market will bounce and continue to the upside roughly from the zone of $24,000 are a little bit much more likely. All right. So what we are looking for right now is the situation when this oscillating move towards the upper channel line and then towards the lower channel line will eventually resume. The market will then break out of this smaller channel. Okay. And the breakout will be to the upside. So let me just show you guys what I mean, what we are looking for. Let me just take the arrow line, and you can see that what I mean is like a breakout straight to the upside, right? So this is, let's say, this is our line. Let's say it's a very thick line, very nice upper arrow. So this is what we need. Yeah. So when the market eventually, let me just make it a little bit smaller. When the market will eventually break above this this channel line, the upper channel line of the smaller channel, the chances for the movement to the upside are quite high. Okay, if I will duplicate this channel, this arrow, and turn it around, the situation we are now waiting for is for this market to go lower, okay, down towards the lower channel line, the bigger one, and smaller channel line as well, and then either break lower and move out of the channel, which will be very good indication of a trend change from the uptrend to the downtrend, or reversal, okay, and the movement to the upside. So this is why we are waiting and analyzing what is going on with this market. So if I will just make it even more clear, so any breakout lower, any breakout lower will be eventually very negative for the bulls, because the trend will change. And the current trend, as you can see, is the uptrend. Somehow there's the uptrend. This is kind of a channelish price action inside of this yellow channel. However, the outlook, because of the big, nice, fat ascending channel, the outlook is still to the upside. Okay, so if this line will hold, we will follow the green dots first towards the upper channel line, then eventually break out and towards this channel line. Or if the bearish pressure is too high, too big to handle, we might have some kind of a breakout lower and we are out of the channel, which will be, of course, the indication of the potential trend change. Okay, so the equidistant channel can be used as an ascending, descending, or even horizontal channel. Okay, the ascending channel is drawn when the price is trending up. So of course we have the bigger opportunity for us to precisely manage the level of the entry if you are trading, for example. So in the situation when the market is trending up, we are waiting for the certain level to have the precise entry according to our analysis. And of course the opposite is if you are trading during the downtrend and the channel is descending. Okay, so there is a bearish channel. So the descending channel is used when the price is, of course, trending down. For the good risk and reward ratio, entry in this case should be, of course, taken when the signal is produced around the resistance level of the channel. We can see the historical evidence here. Okay, this is the upper channel area, and then we go down, and then again we go down. Then another attempt to break out, upper channel area, upper channel line, so which is called the resistance line. Down we go. And of course the other way around, it works for the ascending channel. So let's now just talk about the situation when there is the horizontal channel. Okay, so we got ascending, descending, and horizontal channel. This kind of a channel, the horizontal channel, is drawn when the price is not trending up or down, but it only fluctuates within the specific highs and lows that can be captured by the channel. Okay, so let's now find an example for you guys of the of some kind of a horizontal channel on our on our chart. Let me just take a look here. For the time being, I can find one, but I'm looking for the for some better one if I can find it. No, it's very volatile market. It's moving in a different directions. Nevertheless, let me just find out if let me just zoom out, if this zone here might be considered as the horizontal channel. So equidistant price channel feature or a tool, we place it here, extend it like this, so we are in of the equal distance. Now this is the upper channel line, you can see, and this is the lower channel line. So we got this. Let me just take a look first. There you go. Yeah, it's okay. It's for the time being, that's a very nice channel. The price went down. Inside the lower channel line, it went up, then it went down, up and down and up. A little bit of a breakout. Okay, then we are trading just around the upper channel line, and then we go back, testing the lower channel line, and then we are definitely off the channel and we never go back. But then look at this, what's happened. Even after some time, the lower channel line still provides what? The resistance. Okay, so as you can see, even this horizontal channel, even if we do it like that, however, I would prefer to keep it here, but for some of you might notice that this is acceptable as well. For the horizontal channel, of course, the oscillating move inside of this channel is very typical. So what the traders are waiting for? The traders will be waiting for a breakout, either to the upside or to the downside, a significant, of course, breakout. Another example of the channel is here. Look at this. We have a very nice equidistant channel on the on this market. Let me just take a look if I have the right. There you go. For example, something like this. Very nice equidistant channel. You can see it that the market went very, very aggressively down. Let me just adjust the channel. There you go. Maybe a little bit even higher here. There you go. So now we are bouncing down, down and up and up and up and down, right? We got the consolidation and then definitely breakout. Okay, so ideal situation is when the market after the breakout goes below the beginning of the channel low, so below that level. So then you can say that the power of the downside breakout is even bigger. The momentum and the volatility for the downside breakout is even stronger. So very often the situation with the price action looks like this. We have a, for example, very, very strong movement to the downside. Then we have this inside of the channel kind of a price action, bulls are trying to go up, then the bears are not allowing it, and then bulls are trying to go up, and then bears are still making pressure. Then again, bulls are trying to go up, bears are making pressure towards the lower channel line, and of course the bear still wants to go down, so they might extend the drop even below this low, for example. So that's a very strong bearish movement. It actually means as well that this would create very strong bearish trend as well. Of course, you don't have to actually apply the equidistant channel on a daily time frame chart. You can apply this tool to any time frame. Let me just find out the hourly time frame chart. So what do we have here is interesting as well. Look, we still have this yellow channel, and now on the intraday time frame we can have, for example, this ascending channel. Look, oh, it's gone. Okay, one more time for me, please. Yes, and now we can have this equidistant channel here. For example, we want to do it something like that. Is there a problem? No, not at all. Look, we have a breakout to the upside straight on. Just trying not this one, but this one here. This one here to the upside. There you go, almost there. So something like this is possible as well. So we are trending higher. We are trending higher and higher and higher in this channel, right? This, and then we are going here, breakout, consolidation, and then we took off. All right. So even after we come back to the channel, we are trending again close to the upper channel line. Look what's happened then. If I just can, there you go. You see, we test this channel back on, and then again we go to the downside. Let me just extend this line here so you guys can see what I mean. There you go. So of course, what we are waiting for the breakout, either to the upside or to the downside. But remember that very, very often the market keeps testing these channel lines from the inside or from the above, from the bottom or from the above, even after the market's already broken out to the upside or to the downside. Okay, so that's a very, very typical behavior as well. One more thing I would like to show you. Maybe it might not be perfect, but still it might have some let's say usefulness for the analysis and for the trading principles. Where is my okay, this is the equidistant channel. Okay, and this is the channel to the upside. So let me just do it this. I know it looks strange. Don't worry, don't worry. Let me just figure it out. You can see this channel even here. If we move something like that, Okay, so we have the equidistant and might be applied to this low. There you go. So look, if you are doing the equidistant channel, and let me just, there you go. Let me just extend it. Here you are. You see, as we, oh, let me just apply to the low. There you go. And now this is the channel 7. You can change the, um, colors, and you can change the thickness. For example, you can do it very, very thick like this or something like that. So you have the options in the cTrader for show the angle or extend to the infinity straight on. You don't have to bother. You can duplicate it straight on, not a problem as well. Okay, so very, very handy tool. And it works for the degrees of a channel as well. Right now, as you can see, this channel is, the information for this channel is that the angle is 19 degrees. Okay, so it's not that bad. But if we move it, for example, a little bit lower, but I want to move it up, for example, where's the line? There you go. And let's say we move it like that. Now it's almost 45%, 45 degrees, sorry. So it's very steep, very, very steep, very aggressive channel. 35%, so strong channel. Below 30% is the channel that is not that aggressive. That the 18 or 19% degree slope means that this channel is okay for the uptrend, for the continuation, but it's far away from being a kind of a channel which is being used for a very strong movement. Okay, so that's the situation with the degrees, with the channels. And of course, if you want to do it with the other channels, if you want to customize it in some way, all you have to do is to change the time frame, or change the current, or zoom in, zoom out to see what is going on. And then of course you can apply the other changes to the other channels, for example, making it as thicker as you want. Yeah, basically. So for example, this one might look like this as well. So this is how you use the equidistant price channel as a source of technical support, technical resistance for the prices. The channel can move to the upside, then it is being considered as the ascending channel. The channel can move to the downside, then it's being considered as the descending channel, or it can be a kind of a horizontal channel. So in all these three channels will inform you what kind of a trend is or was present on the market during the particular period of a time. For example, from the beginning of the December to, let's say, to the present day, basically, right? The trend on the Bitcoin was up, okay, at least from that specific time period. So by using the equidistant channel, you can have the information about the trend, up or down or horizontal. You can have the information about the aggressiveness or strength of the trend by measuring the slope of this channel. The more aggressive trend, the more sloppy is the channel, and the angles are bigger, basically between 45 or even 50 or 60 degrees. I'm not even saying about 90 degrees because it's vertical, of course. And you can have the information about the potential targets in form of the eventually technical support, technical resistance, technical support, technical resistance. Please notice the fact that very, very often the trend levels and trend lines of the equidistant channel, so the upper channel line and the lower channel line, these trend lines are being tested from below, from above, sometimes even after the long period of time. So this is how you apply the equidistant channel tool on the cTrader platform, and this is how you use it to analyze and even to trade the markets using the trend following strategies. That's everything from me for today. Thank you very much for watching this webinar. I hope it helped you to understand the situation on the cTrader charts better. I hope you are going to use it in your everyday trading. Maybe even you will get to master this this technique, as we are trying to teach you in order and educate you in order to you to become a cTrader master as well. Thank you very much for your time and see you guys next week. So take care and bye bye.